Good morning, friends. Today we are going to analyze SPY chart as on 5th August. This has been updated here. You can see the date on this chart on the bottom left corner. This is 5th August. So, as you can see on 5th August, as per our strategy, we will compare position of the market at the open as compared to two favorite moving averages. One is 200 period simple moving average. This is a red color moving average, and a 20 period simple moving average, which is blue in color. Now on 5th August, the market has opened gap up above both these averages, and first candle, 5-minute candle, closed below the open price, which is the candle is a red candle. Now, as per our strategy, since the market is above 20 and 200-day simple moving average, we are bullish on the market, but the color of the candle is red, which is not matching with our analysis. And on the first candle, we don't want to take any trade because there is a conflicting signal from the market. Now, if you analyze the second candle, it's a strong bullish candle, and it has also taken over the high of the first candle. So we can take a first trade in the direction of our view, which is bullish side. So once we enter this at the close of the 5-minute candle, our stop loss goes below the low of the second candle, second bullish green candle. This is our stop loss. And once the trade progresses, the market turns, it is not going up, and it came down and took our stop loss. So first trade on 5th August is a losing trade. We lost -1 risk reward ratio. Risk reward. So once the first trade is closed, then we are looking for opportunity for the market to again come back over the 20 period moving average. This is blue line, because the market is already above 200 days simple moving average, and we want again waiting for the market to come back above 20 period moving average for a re-entry. So if you see price action from this time, approximately 10 a.m. till around 12 a.m., the market was in a slightly bearish mode, but it stayed between the two moving averages. And as you know, between the two moving averages, it's our no trade zone. Even if there is some good price action, we are not going to trade between both the moving averages 20 and 200. So till 12 o'clock we don't get any trade, and then if you see this candle, it comes out of the no trade zone, and it's a green candle. It's a bullish candle. But if you see, the size of the candle is very small, and it is not that bullish. Actually, when we have suffered first trade as a loss, I am expecting a market to come above the 20 period moving average, take a retracement, show one bounce as a confirmation, and then go in the upward direction. That is a more safer trade. And since the candle is not very bullish, we try to ignore this candle and wait for some more confirmation. After that, if you see, this second green candle is having a wick at the top of the candle, which is not a very bullish sign. Third candle is also very small bullish candle, but it has a small wick on the top, so we don't want to enter here. Fourth candle is also a green candle, but a very small candle. And since it is showing a continuously green candles, 1 2 3 4 5 6 green candles in a row. Generally market do not go in a single direction for long continuous candles in one direction. It is likely to retrace and come to our 20 moving average to take a support and then bounce. Okay, so we are waiting for market to retrace back to 20 moving average, take a bounce, and then we are ready to go bullish. So if you see this candle, this is a red candle. It is a bottoming tail bar, red color candle. The wick is on the bottom of the candle, which is a good sign. It shows that market is trying to turn into a bullish momentum. This candle, next candle, is a green candle. It's a solid green candle. It is bigger than most of the candles in the past half an hour, 1 hour. And we enter at the close of this candle. Our stop loss as usual goes below the low of the green candle. Here is our entry on the close of the green candle, and here is our stop loss. This is our stop loss. Okay, the market slowly goes up in a bullish territory. It almost it reaches 1:1 risk reward ratio, and because of this we will try to move our stop loss little bit closer to 20-day moving averages, so that market does not come back and go into a loss, because we have already earned some, we have gone in a profitable territory. We don't want the market to come back and hit our stop loss and we lose our one risk unit. Instead, we can make them move the stop loss cost to cost, and because of this the market comes down and takes our stop loss, and we are basically break even on this trade. So this was the second trade of the day on 5th August. First trade was loss of -1 R, and second trade, in fact it is not zero, it is if you put a risk reward tool, you can see we have earned a risk reward of 0.03 risk reward. Okay, so two positions on 5th August. First was a loss of -1. Second trade, first trade was a loss of -1. Second trade is a profit of 0.3 risk reward. Okay, after the market falls, after the second trade is closed, market is again hovering between two moving averages, 20 and 200, and the market closes, and we are able to take only two trades on 5th August, and the net outcome of both the trade is -0.7 RR. Now these trades have been updated on our website. If you can see on the website, I'll show you exactly where it has been updated. The first page is basically our trading strategy is explained in detail. Stepwise explanation of trading strategy has been explained. If you go to the little bit lower than that on the website, you will find a chart which shows pictorial. The strategy has been explained in the chart. And then below that, this is a social media links where you can subscribe to get any useful insights and charts. If you see the second sheet of the website is PVI analysis, here the chart has been updated and there is a table where the results of the trade have been updated. Now we analyzed 5th August trade, which is here, the row number 12. I'll make it red color. Okay, so row number 12, this trades have been updated. First trade, as you remember, first trade was a loss, second trade was a 0.3 profit. Net we lost 0.7 risk to reward on this day. This has been updated here, minus 0.70. Okay, that's all for 5th August. And